my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and here we are on Election Day, November the 5th, 2024. It's the big day. It's the big day in the USA. I wonder what kind of shenanigans will be going on today, what kind of news events, what kind of history will be made today. Either way you look at it, it's going to be history. Whether they have their first female president or whether they have the returning president. It promises to be interesting in the market. So once again, it's advised for all that's worth to stay out of the demo trades today. Stay out of all of that mess and just observe. Take screenshots, make a diary, whatever you got to do, just kind of sit back, relax, and just enjoy the fireworks. We're going to still try to read the charts. We're going to see if we can stay inside this. The horse tends to be the best of the bucking Broncos today, and we're going to see if we can stay on the horse and see if we can see if there's any algorithmic stuff here or where we can predict where the manipulation might go. Again, no chance, no opportunity to get into the market, not even demo ball in this. I just want to see how uh, we can read the charts. Putting a demo trade in here, I think would it just entice some people to want to trade this, especially if we hit a demo trade that works really well. So I'm just kind of going to kick back and just kind of watch price here and see if we can't stay on the horse. Let's see. Alrighty, let's get down to let's look at the 1 hour chart here. Look at those wicks. It's a lot of switching up going on there. So we're still in this consolidation down towards the consequent encroachment, or what we consider the equilibrium of this larger range right here. We're sitting pretty much in the middle of that right now. So you want to sorry, I'm just checking to see if we are live. And we're right there. Okay, I think that's us. Videos live. Sorry, I'm just looking at, I want to make sure my screens are off here. So yeah, we're in the equilibrium with this large range here. I don't see anything above us except for 220 in that range, 220, 208, 200. From 200 to 208. Look, keep your eye on this level here. We could see crazy whipsawing. We could see this just clean out all of this here, clean out all the whole lower half. So this could be a big run on liquidity above and below the market here this morning for the last few days. I've got more boxes on here. I'll show you these guys in a minute. So we broke up above this high. We've returned to the high. We're continuing to go higher. We have a small little reversal here. Transferred or traded back into it, and now we're above values are above here. So we come back into that level. You want to see this, see if this holds and starts going higher. We've already traded back into the fair value gap here, busy here. This is when they start to really switch things up on us. See, they already ran through it already. So you're looking for this to come back into this level here now and go lower, and we're inside this range, and you're looking for 140-ish, 144 to a 139. So we've now tapped this. That's perfect right there. Now you want to see that just keep coming down lower. I'll make sure we're still on here. Yeah, we're still going. There we go. Okay, let's go in here. I can't seem to find our video on YouTube here. Here. So you want to see if this inversion now holds price. We're going to continue coming back down to that 142 range. Okay, we're finally getting that drop down. Oh yeah, it does say we're live. I see us live on my cell phone, but I don't see us live on my iPad. Douglas Fairbank. I like that. He was a good actor. Welcome, Douglas. Let's see, you're on there. All right, so we've hit that 140, 142 level. So far, so good. Now you want to see if this low gets taken at 137, and then we continue dropping. Then I'm looking for 129 to 131. Let's see if we take that number out there. There we are. All right, Douglas, it's just you and me, man. There's 8 others, but they're not talking. All right, so we've taken out this low here and looking for 129-ish. I wouldn't want to see above 143. Let's look at ES and see what we got here. This just looks like it's poised to hammer down. Could be a whipsaw week. I tell you, this just gives me this ominous feel right here. I don't know why. There's nothing in there right now. I was telling my buddy yesterday, he's into real estate. So even the banks look like they're poised to do a correction here. So now we've got this low's been taken. So we have a break in market structure to the downside, a return back up into the open or the close of that candle, and now we're pulling away. We have a break in structure in Dow. We've returned back into the order block and that fair value gap again. It just feels super heavy to me. And we've got a break in, we don't quite have a break in market structure yet. We have it here, but we haven't broken the downside here yet. We haven't broken the downside cluster over here. But 1 out of the 3, 2 has got made equal lows, and this one hasn't quite reached for yet. But they've all broken that little intermediary one right here. See that little short-term one? Taken, taken, taken. So it just seems to me that if you run this up into this level, even in here, and then slam it down, there's my downside objectives. If we do get it, if we do get a big run day, you know, the Nasdaq could lose 1,000 or 2,000 points. 1,000 points. Who knows? Anyway, that's where I don't want to be a doomsday predictor, but it just looks like it could be heavy. US dollar. We get below this mean threshold. We've already hit it once. If we start taking out this low here, look for a rundown, and then this could just auger down to. It's all poised to potentially go lower. GBP, it looks like it's you got these relative equal highs above you here for British pound. If we retrace back into this candle's high, which we've done already, mean threshold or the high, the low of that candle, so back to this 129.74, 129.75, you get back into that and then kick off of that and start driving higher. I wouldn't want to see it revisit this. I'd like to see that continue to stay open. If it does give this kind of rollover election, kind of stay inside the range, look for a return back into that consolidation and see if that continues to take you higher. And euro consolidating like crazy, so you're right in the middle of the range right now, so got nothing for you on this one. Could come back to you. You've got this one going higher, this one going lower. You're in the middle of the range. You've already reached up into the premium. Now we're coming back down to the discount. So this could be the compression before the break. So if the American dollar tanks, it does a quick run up, drive down, take out the liquidity here, and then tanks, and we get this run back up into the higher highs. That's the 1 minute chart. Let's have a look over here. Well, we're finding support here, so I'd like to see this go higher, reach for these old highs here and here. 109, 109.15. If you get the rollover on the American dollar, look for 115. Crude oil. We've just taken out these highs here and we've returned into the mean threshold. That's the mean threshold of the up close candle. So this has some more upside, I guess. We've got a new day opening gap here. We have some more upside. I'm going to postulate that it could make it all the way to here. That's my upside area of interest. So you're already hitting 50% of that range. Already hit that from the high to the low. Oh, I apologize. Yes, we have hit 50%. We're over 50% there. We're bouncing off of it. Staying in the lower half of the range. We're in the premium of the discount. that portion here. 75% retracement up to 79 would give you the optimum trade entry reversal. If we'd ended up making up to here and blasting through all this lot. It's really choppy, so nothing clean in here at all as we expected. Yep, nothing clean in here. Forget the Canadian dollar. Wheat. Really choppy here, off price. Got nothing for you in wheat right now. We're still stuck in the middle of this candle. We have got an imbalance here. We've traded above it and into it. So for me, technically, we're still we're going bullish. Even though that little downside box is my objective right now, I'm bullish. Inside wheat. So until we get below this weekly imbalance here, this new week opening gap on the downside of that, we're stuck in the middle of these three. Soybeans, we've hit that upside objective and we're just flat now. Everything's flat. Corn's flat. Relative equal highs on coffee. Sell side's already been taken. I'd like to see this just wick up in here one more time before creating a reversal. So got nothing in that. Sugar, we've hit the downside objective for sugar. Now that moves to sell side liquidity. Live cattle, still back in that consolidation. Let me look at that. If we get a closure today and a reverse back into this fair value gap for just popping into the edge of it, or the consequent encroachment of that, leaving this open, I'd like to see that continue going down. So I'm turning bearish on cattle. Cocoa, we're back into this range again now, so I'm looking for, that's pretty much 757. That's pretty much hit it already. I'd like to see it get through, if it gets through 757. I'd like to see that close above 757 to go bullish. Otherwise, if we just get these all turn into wicks and we start to roll over here, I want to see that get through. Yeah, so 556 is upside. If we get above 556, then we get to get through 6946 for cocoa. Otherwise, we're right now sitting in the middle of that range, right around equilibrium. So conveniently through an election. Let's look at, and the lean piggies are, now that we've taken out that high, we're back into the range again. So we'll see how we act off the, take your range, your gap here, divide it into quarters, and see how sensitive each quarter level is. You'll probably find the consequent encroachment of that bring us back into this order block, see if we get some support off of that and drive higher, or if we give up the ghost on that and start working our way back inside. Bitcoin. Good morning, Ollie. I'd like to see Bitcoin get above 754 on a close, and then you can use that to leverage going higher. Everything's consolidating. We're waiting for the big news. We found support on gold, so I'd like to see gold start taking out these equal highs. This could be a big mover today. We could see big runs up in gold. Google's hit that consolidation now. We could come down one more time into this 165. That'd be it. I wouldn't want to see it. I'd like to see this stay open and go higher. If we lose that, we're taking the equal lows here. UNG. That's the little gas one. We have taken these lows out now, so I'd like to see this start to find support off that fair value gap there and start pushing higher back into that gap above us, at least for the short term. Now I've gathered up a lot of liquidity down here. You want to try and pair that up with liquidity above the markets. These are a bunch of just American stocks I'm looking at that pay really well, like really good dividends. But I'm not studying them enough to give any opinion on them. Other than the fact that this one here, this Northwest Natural, could come down to 37.84, 37.84, I think that is. 37.86, 37.9, something like that on the downside. Then I'd like to see some sort of reaction in here. Lots of relative equal lows below you in these. Nothing in there. So we can get a return all the way back up into this imbalance up here, which is like 400, 300 and somewhat handles above us, and then snap back. Mm-hmm. ID, good morning. Expecting some big moves, some volatility. Size down, stay safe. Totally agree with you, Ollie. I'm not even participating in a demo account in this. I want to keep my focus entirely on price action and not get distracted by trying to squeeze a demo account. Trying to make a demo account bigger or smaller isn't really going to make it for me. So that's just my focus. I'd be focusing on trying to how much money I can make in kind of crappy environments like this instead of just studying price action. So now's a really cool time to start looking at studying price and how manipulation doesn't give you the expectation you're looking for. See how tight everything is here? You got to return, but break above this high, return to it. Break above that high, return to it. Break above this high, return to it. Break above that high. We're here, we're already back to this one. And we're still inside that candle. We have a little imbalance right here. We've traded above it. It has to get above 161. Victor, good morning. No trade day. I agree. I agree with you agreeing with me. Buy side targets are 254, 249. Yeah, there's lots of equal highs above us here. Agreed. That's a lot of wicks going on there. I'm just gonna go turn on my coffee pot. I'll be right back. All right, what do we got here? I don't see anything super exciting happening here yet. You can see overlapping ones here. Just gonna make sure. Yep. Just want to make sure that my audio recording is still working. Taking out that low. We've got this here. We're really between here and here right now. 161. Trade above that. Keep going higher. Morning, Hans. There's 161. Opened above it. Come back to it. Go higher. All the way to there. See, now we traded below it again. 160 is all I wanted to see that come down to. And we gap below it. Brings us back into this range again. So 158.50. See if that holds. Gapping up. It's certainly not acting the way we want it to act. I like this. Now back to 161 again. 158, 161. We're looking for a breakout above that. You want a body get above there like we had here. You want to see that just come back and tap it and go. It's right back into that range. Came back up. There's a little tiny imbalance here. If I expand this out, you can see it a little more clear. Look at this. There's so much gapping going on here right now. Those gaps become a level of importance, right? So the gap there, return to it. Shorts on either side here. You haven't really taken a high. So you want to see this level give up on the downside, and you've already closed below it. You've opened below it. So you want to see the mean threshold of this candle hold. The mean threshold is hit at 45 candle. Now I want to see this start climbing back up again. And you're back inside that small range. If it does what it just did, blows right through that mean threshold, takes out that low, you want to see a body break below this. And then you want to see these. Now these lows are taken. We haven't got a body below it yet. See how that's an important level where we don't have a body break below it, so we literally freeze on it. We have a wick that takes out the lows. Now we've got a body below, comes back up, gives it a little kiss. Now you want to see it go lower. And where would we like to see it go? These equal lows below us here. There's a little fair value gap that hasn't quite been filled yet, which is just filled right now. Look at that. Perfect fill. Keep coming. Take out these lows. Start digging into this imbalance in this fair value gap here that hasn't been hit yet. So you can see how it's been trying to shake us off here with these gaps up and gap down. That changes the dynamic of inside that range, right? We don't usually see this many gaps occurring. So you can either smoothen it out more. If that makes you feel uncomfortable, you go up to the 1 minute chart and you don't see as much gapping, but you still have imbalances here. So downside, we're looking at 146 to 144 on the downside. Come back into these equal lows. Continue coming lower. It only starts to change up when we start getting through this here and using it for support. And then you want to get through this imbalance and this imbalance before running the highs. Right now we're just looking for this to go lower inside this range. Pull your fib tool on there. We'll see if we can stay inside this range here. And you're looking for the first level, which is your 50%. There's 50%. My coffee should be brewed. I'll be right back. All right, we're back. Nope, we haven't hit 50%, so looking for bodies. It's like a cam 1 model on a 1 minute chart. Good morning, Craig. How are you doing, buddy? On the weekly, we've been accumulating in this zone for a number of weeks now. Seems to me respecting the mean threshold of a weekly candle level of 2007. Let's have a little peek at that one weekly chart here. Get my carrot off of there. We have multiple carrots. So we're at the discount portion. There's the weekly fair value gap above you here at 330. We've come back up and filled it. So if we pull that over, you'd think that we could probably make one more run on that and go lower. And can you see the range that we're in here? If this premium range is hit, but we didn't get through it, and now we busted through the bottom half of it, and we come back, find support at it, where's the downside? Way back in here. Remember saying it felt like it was just going to drop? Here's another weekly confirmation of a downside objective. You'd be looking for 19,146 to 18,877. 18,832 as potential downside. If it starts to drop, that would be my objective I'd be aiming for in a weekly. All right, let's get back into that one. So we've rolled once again. Well, that's a 5-minute chart. There's the 1 minute. So we've got back into this level here. the wick, 50% of the wick, and now we're rejecting off of that. We have a downside objective around 70, 75% here to 79. Good morning, Zach. I hope you're all doing well. Keep your fingers off the buttons today. Just watch. Some people want to catch some big volatility and they're feeling lucky. You feel like I'm going to gamble. I'm going to throw down some 10 contracts on the Hail Mary play for today. This is kind of a fun day because when you see volatility, these are the days that you not only journal your screenshots, like looking how choppy this market is, back and forth, but also journaling how you feel, especially when it starts to rip away on you. And the first thing that pops into your head is, oh, I wish I was in that run, right? Oh, think about the money. Oh, think about this. Wherever your mind goes, that's the thing you want to focus on because that's kind of like the psychology of your trading talking to you. And you're thinking about how much money you could have had on that, or how could I have found a way to get in on that. You're making the right decision by just simply watching. It is a gambler's field out there right now. And even though we're going to try and stay on the horse, that is by no means an invitation to trade any of this, regardless of whether or not we catch a major rundown. Who cares? Who cares? But definitely journal how you're thinking and what goes through your mind, especially when price action does a big switch. Like if you see it whip down here, screen capture that, put psychology over here and start making notes. What was I thinking when I saw that? Well, I saw this great entrance right here off of this reversal. And if I would have taken it, I could have just banked tons of money. On a day like today, nah. See how it's not active, how we would typically expect this to act. This is just noisy here. We've broken this high. You'd expect to see a nice clean fair value gap. And usually I like to see these occur above the previous price action. You see it happen above, nice clean sharp reversal. Breaks through it, comes back, taps it, and keeps on heading. See how we've got this just chop, chop, chop. We've run through it. We've come back into that level that we're looking for. And we're really not making any further progress down. We haven't got a body break below this candle yet. We've got wicks and we've got a body froze right on it. Just above it. And we're not really breaking this thing. So now you're still stuck in this consolidation side to side. This is not clean price action by any stretch. Now we've got a break below. So this level is providing the support we're looking for. We do not want to see it get above here. If you want to go lower, if you want to go higher, you want to see it break through here, find support above that imbalance, and then go higher. So for a short, you want to see this close here in the next 3 seconds below that level, not just wick through it. And it didn't. So now this becomes an important candle if we can get a body close below it. Keeping in mind we're looking for 146 we said, and the next one's down here. waiting. First one hit. See what the consequent encroachment does for us. Running right through it. I like it. Lovely. See how we just close below it? Come back, tap it, and keep running. That's a drive. That's a drive. And it's funny, I was just telling you, what if this just drops straight down right over here, psychology? This is it right here. Ask and you shall receive. There you go. So we got some support off that level. What are you thinking to yourself? Could I be in this? Should I be in this? You called it up here, or I called it up here. Why am I not in that? Because it's election day. That's why you're not in that. It's crazy ass election day. And this is all just choppy mess. We finally got a candle drop below this, and all of a sudden it just snapped right through all of it. Hit our objective we're looking for inside that range, then extended the range by giving you that little hint that it's gone lower, quickly tapped it, and then went lower, took out the range low. And you're looking for the downside box would be right there, right where it's sitting right now. If it extends below that, now we're looking for the next level down, which is these old lows right here. We have a weekly gap below us. 15-minute time frame here. And then we got another low. I tell you, I really hate these trackpads sometimes. Your fingers are not on the right side, you get the wrong. Direction with the pointer here. There you go. So lows are taken now. The last election was a 691 point day. It's 280. Average trading range is 280. So we'll see if we can beat 691 for a wackadoodle day. Now really document what you're thinking after we called this level here. I wonder if Tristan's playing with this, or Justin, I should say. Justin likes to be in the market. Let's see if all of them are doing the rundown. So far we have a higher low, lower low, lower low. This is the only one that's not acting in accordance with so NQ is the only one that's out of sync with the other two markets, making lower lows. Let's have another quick little run through these guys. Dixie. I don't think Dixie's finished running up into here. You're looking at consequent encroachment of the weekly new week opening gap here. I'd like to see it hit off that, or at least the 25%, which it pretty much has hit off 25% here. On the 4 hour, let me go to a 1 hour here. I don't typically do 4 hour. Yeah, we're compressing here. Well, 378. If we roll off of here, if we roll off that candle, I want to see 103.60 close on the downside. If we can get a body below here, then I'm looking for this mean threshold to give way. We've already drilled through it 3 times, so I'd expect that to give way and run for the lows. And we'll look for lower prices. These would all be technically higher prices, so we got the relative equal highs above you. Still in pound. Euro's got relative equal highs above it as well. It's inside a small range here. I like to see this provide support. I don't want to see that wick get taken on the downside. 50% of that wick is as far down as I'd like to see price go in euro before climbing higher. I'll put that little line in here so we can all be happy with what I'm looking at here. And it took it out, so we'll ignore that idea. So now you want to see if we're going to continue taking out the mean threshold of this candle. We want to see this fair value gap here, hold price. Close below it. Rejection block. So whether you close below that or above that, because you're between here and here. This one to go higher, this one to go lower. And you've got mean threshold here, equal highs. And yeah, you've already bounced off the premium array here already. So you don't want to see, you want to see it close above here to go higher and take out the highs, or it's got to close below here to run for the mean threshold. And if you lose that, then we're going lower. That's my little objectives there. I'll put those in so I can reference them again later. Got to get above there. Find support here. Get above this. Bodies are still respecting that. It's got to get above there now. Go for the highs. Oil. Look at that nice little run on oil. We have a reverse here. Nothing. Highs. Nothing. Highs. Nothing. Highs. Highs. Nothing. It's not till you get back over to these old highs here that you get a reverse into them and goes higher. Look at the daily right here. So we have this imbalance above us at 73.25. I'd like to see that hit 72.76 first, 73.25, and then 74.23. Those would be my upsides. Obviously, this first one is 72.42. Take out this old high here and see if we pull back into the range again and still leave this open. Consequent encroachment, I think we've hit that already, so half that wick, hit that already. You do have a reversal going on here now. So you'd have to take out this low and see if we get a, unless you get a pop back into here, then you're inside that range. But if this keeps driving back down, do we take that high? That high is 72.34. No, we haven't. So watch for this low. Are you in long on this, Craig? You've got a reversal already, so if we take out this candle here on the downside, look for a deeper run back in here, because none of this, remember we're saying, I'd like to see that, don't get it, don't get it, don't get it. These are the ones that you tend to, if you tend to reverse, are the ones you start to aim for on the downside. So let's see if we can get a candle below here. Or we can attach this first. Now I wouldn't expect it to get up here, but then again, it's election day, so you want to see all that stay open and just use this bottom one as the one to key off of. Well, there's a little imbalance here as well. So now you're just looking for this body taken out and a break in structure on the downside here. I guess this one is buried inside these two. So you'd want to see both of those go. Was in, now out of crude. Got my run up. Back to waiting. Good man. See how that, again, we don't have a body closing below there. It literally freezes on it, hey? How many times do you see that? Now, if this does play an important role, let's see what the body does. See if that actually holds right there and goes lower. We have a little imbalance right here. We've taken out this low, taken out that low, and we've taken out this low. And a little imbalance. You'd want to get above that candle there to find support to run back into this range for a long. I want to see how we act right in here now. Okay, so we're above that. Got above that candle. Imbalance. Watch here now. Next 2 seconds, do we close above it? You do. Now you're back inside this range. Give it a kiss. Now you want to see this whole candle hold price. If it rolls over now that you've taken out, not this little cluster of highs, there's no real swing there, but you got another one forming here. So you'd have to see these two get taken on the downside for a continuation on the downside. Otherwise, just a return back into this level here is all of it acceptable before going higher. So I'd expect to see this come back into this range here now. And you're all talking NQ, so Hadid's saying there's been a reversal on the 15-second chart, and that there has. Indeed there has, my friend. Indeed there has. Albeit choppy, it is a reversal. Take out that high, come back into it. I like that. Take out that high. We don't come back into it. Take this candle here. Deeper into the range, pull your fib tool. I feel people in their temptations to hit that button. Oh, I'm going to hit the button. I'm going to buy today. Still, the algorithm's working. I don't see any reason why I shouldn't take this. The algorithm looks like it's working perfectly fine. Why shouldn't I take this? It's so obvious. What's our little Bitcoin up to? Bitcoin. Well, it ran that internal range we're looking at this morning from here to here, box to box. We traded inside that up to the other box here. It's all choppy right now. Gold. So far we're seeing gold hold price in the mean threshold of this candle on the daily. So 40 drilled through multiple times into this mean threshold. So if we just run back up into this fair value gap here, or this one here, anywhere inside that range, just running into half this wick even, and then roll over and start digging down into here, everything is poised for a big drop. It just feels like everybody's going, oh, that's just on a total bullish trend, but it's just poised for a major drop for me. Pre-markets 313.11. I got this at 1256. I bought this at 1256 down here, right at that low. So I'd like to see this dig up into here. Take 10% out of that in a couple of days. Move to the sidelines. Look at that, Hadi. Good work, man. Did you trade it? Did you trade it, Hadi? I took a long and some profit in my pocket now. You did. You couldn't help yourself, could you? Left the London low, relative equal lows for later. Hadi, I was waiting for it now. Don't buy it at the high. Yeah, you know what? This is one of those ones where you say, well, if you manage to run this up inside that range, and there's some good open down close candles in here that needs to get rebalanced, that if you try to buy this for a high in a consolidation when the markets are just running highs and lows, then you're definitely increasing your risk the higher you get inside that range. I'm looking for the big extension. This could just roll over and keep building liquidity on both sides of this. Then as the election results start to come out, then you start to see these big hunts because all the news is going to come out about who's leading. And you imagine as time goes by, the East will start giving reports, and you'll see the numbers will come out very Republican side on the East. And as you get closer to the West, then you'll start to see more of the Democratic vote. So you'll see how the markets or the vote will initially start off with a more Republican, heavier based poll, and then start to even out as you get further west. So I'm interested to see how that affects the market. See if there's a lot of influence that goes into manipulation. Seeing Trump winning, which direction does it go? At the end of the day, and California's finished up, it's a big state, a lot of Democrats there, lots of big votes there. So there's your CAM Model 1. It's a CAM Model 1 entry here now. We've just run out that high with that wick. Displacement below. Come back inside. CAM Model 1 for a run back down into the range. And if you pull your fib tool from high to low, is this optimum trade entry reversal? 75 to 79%. So you got out at the right time there, Hadi. So now if it takes out this fair value gap on the upside and then takes out this little cluster of candles here, when you get through 50% of that, like if that CAM2 model doesn't hold as a solid, um, create a breakaway gap, then you're going for a run higher. And see how it's just not, usually you see come up, hit it, and start to really react off of it. This whole high resistance bashing around stuff right inside a liquidity, an area of liquidity that we'd like to see, or PD array that we'd like to see get some momentum off of it. See how it just hits it and just goes waffling around sideways. There's no major punch going on there, so they're holding price around. It's not acting as we'd want it to. So that's the low. We did not get that low taken. We're looking for this to, if we can get off of this candle here, this imbalance, now that we've swept that low with a wick, that imbalance, we trade back up. We talked about it getting back into this order block here. It's literally hanging inside that candle. It came back one more time inside that candle and drove higher. We had that potential reversal above this little high here after taking out 50% or more of that range. So that's something you got to be wary of. It came down, you go, it'd have to take this candle on the downside in order to continue going lower. It came all the way down, did the same kind of thing it did over here. See that? Where the body does not get below the low, but the wick does. The body does not get below the low, and the wick doesn't either. So all the time that that is being supported, and you're looking for, okay, now does it run above that? It does. Right there. It closes above, comes back, gives it one more tap, starts driving higher, takes out the highs. We got another reversal forming here. So we could get a reverse back into this range here now. So just keep your eye on these candles. This one right here. And look for a run into here. Don't get yourself upset there, Craig. It's not a day to play in the markets. If you're catching a few bucks, good for you. Or I should say lucky you. You never know if it's going through or saving it for later. Yeah, anytime it starts to trade through that objective you're looking at here, this is your upside objective. If I'm looking inside this range here, watch how it trades through it. See it right here? It closes above it, literally comes down, taps it one more time, and leaves. Here's your indication that it's going higher, right there. Again, you'll have to see that for yourself to believe it or not, but that's what I look for. Now you got to get it above 72.28 for the very reason I just mentioned here. You got to get above 72.28 right there. And now you want to see it come back down to 72.28. And we should see it go higher. So again, here's a price action study to see if that principle works or not. If that belief about price action, again, you got a manipulated market, and you've got election stuff to go through. There's 72.28. Now I'd like to see that go higher. If the same rule applies as it did down here, we'd like to see this high get taken. That can come all the way down into 72.24. You're always looking for a fair value gap to turn into an inversion, and that inversion hold price to go in the direction you want it to go. If the inversion doesn't hold price, it gives you an indication that it's changing direction and heading higher or lower. So there's the highs. So far, the principle holds true that we talked about here. Same thing here. Traded above, came back inside, running higher, took out this high. You want to see it take this high here now. That's how you know, or you can estimate whether or not the range will extend or whether it will roll back into the range again. If you close through it, then you're looking for a run back into the range. There's a stab back into there one more time. This is when you start looking at this going, oh, this is crappy price action. You want to see it hit it and go. You don't want to see all this waffling around in here, but again, it's a nice little price action study. And this is where you see your analysis starts to really get questioned. You'll start to go, am I right? And you like think about the market we're in right now. We're in a 15-second chart and look at how choppy it is. It's not hitting our price action cleanly and leaving the way we want it to leave. So you're going to be constantly saying, yes, I'm changing my mind and changing my mind and changing my mind. And even that psychology alone will make you second guess whether or not your principles are working. And don't, because you got to consider the market you're in. You got to consider the conditions you're in. And this is what we're expecting. We're just trying to stay on the horse. That's all we're trying to do right here. So yes, it's going to change up on you quite a lot. We've taken out this high. You got a swing here, or you have a reversal here. Now we have to take out these lows for this to consider a swing reversal. We're reversing direction now that we've taken out that high. We didn't take this high, which is what we were looking for. We now have our regular trading hours gap. And we have the consequent encroachment right here. Took out this low. Consolidation, took that out. Now you want to see this low get taken. See, we wanted to get that high taken and it didn't hit it. It just hit it. Off this we talked about here, went higher, took out that high, reversed, came back up inside it. See right there, you trade below it, come back up inside it, take out the lows right here. Now you're looking for, do we have a new imbalance right above us here? And does that now create a reversal? We'd have to take out that high there to start pushing higher and take out these relative equal, or these equal highs above us. If not, keeping in mind our regular trading hours, consequent encroachment as a objective to aim for. We've now taken out the lows I was telling you about. We want to see that get taken. We did. It's come back into it. Now we're looking for it to go shorter. So far it's still acting the way we want. It didn't give us what we wanted up here, but it did take out the highs and did show us that it's changing direction. So you got to be nimble. You can't 100% commit to that and say, oh, it doesn't work. Well, you missed this whole opportunity right here to say, hey, look, I'm changing direction. How do I get back in sync with the market? What we wanted to see was it take out that low to confirm we're going lower. It did, came back, gave you an opportunity to load up your trade for a short back in there. Not that you're taking a trade, but you know what I mean. Just staying inside that on the horse. That's all we're trying to do. Good morning, Edgar. Campione, good morning. Indices up, up, up. So we have a little imbalance right here. There's your first fair value gap, your initial presentation. Come back, give that a little kiss, clean out this candle here on a close, and then you've got a new direction you're chasing. There you go. Closed above it, changing direction, and now we've taken out this one. So this one's the one you want to play off of, not down here. You want to see this stay open now. You want to see that act like a breakaway. Find support here, push higher. All the way back inside that candle, right to there. So we took out this one, we took out this one. I guess you could come all the way back into that high right there. It's great if it stays in that candle, keeps running. Look for the equal highs now. Okay, so far this candle's still giving us a little bit of support, which is what we're looking for. We're bouncing off the top of the regular trading hours gap. Looking for these highs. They're taken now. Do prior day London high or lows mean anything? Yes, they do. Yes, they do. They're definitely objectives to aim for. So let's look for, oh, I'm in oil here. I'm spending my time thinking I was in NQ. So that's where you want to see support here now and start pushing higher, Craig. But again, you're in the premium portion of that range. So you'd want to discount below here. You'd want to see it come back into here, or at least 50% of that uh, candle before going higher. But if it supports off of here, great. And then the next level of support is here. If we just get a wick and then it comes back into the consolidation again, and you end up buying it high at a premium, and that doesn't hold, then you're looking for a run all the way back down into here. And if it runs through it, then you're going to take a loss, quite large. So there's the return back into the discount portion here. Hit off that candle there. Now, does this stay open, or do we find support here? You want to see that just drive right through here now. Not get back into this range. So that was the 50% of that. So like I said, if you want to look for a discount, you're going to get a discount out of here. There's your discount. Just pop below it into that little candle we mentioned earlier in the thread. And now you want to see that keep pushing higher. And right now I'd suck that stop loss right up tight with it. Just put it into profit. In case she turns on you. You want to see that really go. This is just super choppy. Let's get back over here. Ooh, looky. I haven't been in there for a few minutes. Look at that run. So where's our 3 upside objective, downside objective this week? So running out yesterday's high at 252, then 288 to 295. Let's see what kind of how many days back on London do you go? 3 days. You go back 3 previous days are the most sensitive. But if a London high or low exists from a week ago that hasn't been hit yet, that's still a sensitive level. Any previous high is considered an area of sensitivity or a target, along with the rejection block, half the wick, so on and so forth. All those PD arrays are still considered essential. Intraday, run for London and Asia. Look for those sessions to be taken out or supported to a higher or lower. Again, you'd have to look at, I don't use those specific sessions. I like this idea. This is a trade model. If you take Asia, let's say Asia session was ticking along like this. An Asian session is usually pretty small. And the moment you get a breakout out of the Asian session, you got to treat the Asian session like a consolidation, and you're going to use a CAM model entry for Asia session. So as Asia's pretty tight, you'll see a displacement candle in London lunch hour. Okay, so London will usually take out a high in Asia, drop down a displacement during lunch, and then come back into the bottom of the consolidation or the Asian session, and then continue running down into New York open. So look for that same kind of in the opposite direction when you want to look at a buy. So you look at consolidation, it tends to run the low, come back up, come back, tap the top of the consolidation or Asian session, and then go higher. So you treat the whole Asian session like a consolidation, like a CAM model 1 to a CAM model 2, and then go higher. That's usually traded during London, and I'm not up for London. So if I ever get to Greece and live in Greece, I can trade all the sessions. That's the perfect place in the planet for me, not only to vacation and enjoy some nice sunshine and beaches, but also the perfect place to trade London and New York in a reasonable time of day. Italy would be the same thing. That would be good too. That whole Mediterranean, Eastern Europe. CAM Model 1. You want to see a piece of it stay open to go lower. You could come all the way back into this little imbalance right here and keep going lower. That's nice. That's nice. That's what you want to see. Look for this whole range here, a fill. That's the fair value gap fill right there. Now, do we take out these lows and keep going lower? Or do we start to reverse, take out this high here now that we've cleaned this out and find support and start cleaning out that candle? So pull your fib tool from there. You'll see that's an option trade entry. Now, is it the reversal after taking this out, or do we use this for support to go lower and start taking out these lows? And I love the fact we're drilling into it already. Perfect. Good. Now we've traded below it, traded below here. I'm looking for support now. Keep coming back into that range. All this can be rebalanced back to 171. Back into that initial presentation of fair value gap. Right there. Freeze, mister. Again, we've got a low taken out. Watch this. If that takes out this candle on the upside, then we're back into this range again. If you're aiming for down here and you've neglected to use this range as support and it takes out, you left 10% of your trade on to go lower. And as soon as it takes this one out here like that, trades back into it, that short is off now. And now you've got a potential for a long because we've now changed directions. You want to see that candle confirmation now. You get a swing reversal when that candle gets taken. Okay. Can you cover London session one of these days? I would love to cover London session one of these days if I'm ever awake. I think I've got one. I'll tell you when I'm going to do London session. I think it's in. My wife has a meeting she has to go to at 2 o'clock in the morning Canada time. I said, well, I'll get up with you, and I'll do a London session. That'd be perfect. So I'll find out what the date is, and I'll announce that on the Telegram channel when I'm going to do a London session, so you can pop in and we can trade that. Stay tuned or pop into Telegram there, RS, and you'll know for sure. Okay, so now we've got a body above here. Now I want to see this support. Go back into this range here now. Start going higher. Sounds nice. And Greece is affordable. And with great food. Oh yeah, the food is awesome there. Tomatoes. Man, you eat a tomato in Greece and you come to Canada and eat a tomato, you go, what the hell's this crap? Greece has got amazing food there. Same with Thailand. I love Thai food. I never thought I loved Thai food, but it is amazing. It truly is a food that you go, I can't even describe this. I don't even know how to describe this food. It is like amazing. It's like tastes that you've never had before. Really is great. Look at all this, look, this choppy chop crap here coming off this candle. See how we're right back inside this range? And again, if you're not pulling your fib tool from here, you're going to lose. You're going to get your ass handed to you in situations like this. See that? That's the candle. Here's the reverse here. Traded above it. You come back into it. There's a long right there. Confirmation is when we trade above it there. Trades back into it right there. And then trades, so below the 50%. Hits, as soon as it hits 50, you move to break even. Runs all the way up to 62%. You move it to 50, it hits 70%, move to 62, then it comes back and takes you out, done, inside that small little range. If you're not pulling the fib tool to help you out, look for this consolidation. See how we're looking to run back to the consolidation? And now you're back off this guy here. So CAM model 1 entry, which you didn't get over here, you get it right there for reverse back down into this little fair value gap here. So I can see how it's hitting here, and you have to pull the fib tool if you want to use anything to scale out of being in the wrong side of this. Because if it turns on you at an optimum trade entry reversal at 70%, that's a perfect hit off of that to reverse and go lower. Well, if it takes out this candle's high right here on a close, we're going lower. And you got to have the discipline to be able to pull. If you're in a trade like that, you got to have the discipline to pull the fib if you're using the fib method to manage your trade. If not, then you got to be very vigilant of your observation of these candles getting taken on the down. You would not want to see that get taken on the downside one more time. Once you've traded back to it, you want to get out of dodge. You don't want to have to rely on this one down here, otherwise now you're underwater. And see how it's hit all the way off of it? It's a perfect entry for a long. If you could, if you're on the wrong side of that, you say, oh, my stop loss is sitting here. If I'm on the wrong side of this, and trades below me, gives me an opportunity to get out. If not, I'll get a perfect long for here, back up inside that range, and that would have been a perfect long. Look for this one here. Look at that. All the way back in it. We didn't get a body break below this level. Literally came back, filled it perfectly. Once we traded above it, we never traded back into it except for here, and that was right on the high of it. We never hit the consequent encroachment of it till here, and we never hit the fill of it until here. It ran back up through this candle, cleaned out the upside objective here on a close, came back, gave it a tap, and kept pushing higher, took out the high, or took out this high that it just made. And now you're looking for higher prices. Wow. That's interesting. But you can see how those levels, we did not get bodies breaking below them. Typically, you'd want to see this candle hold price and keep pushing higher. but that's where you could allow it to come down to. And it loses its luster for me as it gets further and further into this. But in this case, it worked perfect. Old high taken. See if you get another little retap of this, or this cluster of candles right here. If we get a retap all the way down to that candle's high, inside those three, you want to see that keep going higher. This candle here, body trades above it, comes back, finds well, we didn't trade back, you opened actually on it. If we give it another little tap off that order block there, you want to see that whole price. We have another order block here, comes back inside it, right there. Keep pushing higher. I like these as little propulsion candles to propel price higher. And we're always looking for a potential for the reversal to form now that you've got these new highs taken out. And we're looking for 288, I think it was, wasn't it? That will put you right into that new day opening gap above you. Find support off of here. You're welcome, RS. Previous day's highs taken. Lovely. Now we're looking for 288, I think it was, wasn't it? On the daily. 289, 288, somewhere around there. That's the next day's high and that fair value gap above you here. Still found support off that candle. Beautiful right off the opening. I like it. Body's respecting that quite nicely. High taken. No reverse yet. Still going to go higher. Surprising, it's been quite nice. It's cleaning up a bit here. It's still kind of wicky, but it is cleaning up a little nicer. I haven't seen any election news, so when do the polls open in the States? Anybody in here from the States? When do your polls open? I would imagine they'd open up at 9 o'clock in the morning or something like that. I know you had early polls. You had like 70 million people have voted already. I'm wondering when the regular poll opens. Look how the 943 inversion fair value given 56 and the whole price and give us a very nice entry long. Yeah, this is a nice little price. I was expecting to see this hold price and keep going higher, but that fair value gap held price beautifully there and kept going higher. Not the most ideal entry. I'd like to have seen that stay open, but it did give you a really beautiful entry right there. It came back, filled this fair value gap here. So you didn't get this as a breakaway gap is what you're looking for. And this fair value gap, you want to see 50% of that stay open or higher. But, you know, hey, you get the perfect entry. You can't argue if you get one of those. Now, here's just like a little poll. How many of you who said, I'm not trading today, actually took a trade today? How many people went against what they said they do? and trade it anyway. That's interesting. I'd just like to know where people are at with your commitment to trade or not trade. And I don't care one way or another. If you trade and you're making money at it, great. If you want to participate in that kind of environment, then there's nothing wrong with that. You got cojones, man. That's all I can say. And just because I think differently doesn't mean to say either one of us are wrong. Just curious to know if anybody's changed their mind and decided, oh, I'm going to take this. Like the temptation's just been too great that you need to get in there because you see the price action's moving the way you want it to move, then that's great. If you see your setup coming in and you take it and your risk is very low and you're getting the rewards, that overrides the potential for the markets to sway you with all the news. You're just saying, no, I'm just going to keep following along. I don't see heavy manipulation going on in the market right now. I just see the algorithm just bouncing around, not giving it to me as cleanly as we like, but nonetheless, it's still giving us some nice trades. Um, 288. There's 288 done. 306 and 329. That's the next upside, says Ollie. Do we look for a reversal and then down to 50% of the regular trading hour? No, you just kind of look for the little range that you're in right now. I wouldn't be aiming for that regular trading hour gap just yet. You haven't even got anything close to a reverse. Well, you've got a close reversal here if this works. You want to see this low get taken out if you want to keep coming lower. We've got that 3 or 288 level we were looking for. It's filled. So we just ran above that high now, yesterday's high. And now we've got a potential for a reversal right here. So I want to see that trade below here, come back inside this and go lower. If this candle displaces through here before coming back like that, now I want to see it come back into the edge of this level. And then take out that low. Then we're looking for another run back below. You'd have to see a decent break in market structure would be down here. But inside that range there, you're looking for this, see if this candle holds price. See how we traded below it, back up inside it. Remember when you got 1, 2, if the candles keep trading all the way through the first one and the second one, look for the second one, trades back into the second one. Now I want to see this keep coming lower. If we get through this candle here, it's just a change in direction. We haven't got any break in market structure. We've just got a continuation to go higher. And if we take out that high, look for this as a swing projection. So we're back up inside that one more time. Waiting for UNG to trade lower to buy it again. Oh yeah, what is UNG doing? 12.95. That's what I want to see hit off of there. If you look at this thing way up here, let me pull this up here. See how we've traded above this level, through it, above it again, back into it. If we trade back into this range, you're looking for 12.53 to 12.67. We'll see if this holds price. Traded above here. See that? Closed above and literally said, we're going to keep going higher. Cleaned out that high right there. Look at that. It literally gapped up, came down, tapped it, and then said, I'm out of here. Quickly cleaned out those highs. That right there, when it broke structure, said, I'm going to extend the range, gapped up, quickly give it a tap, and then smashed away from it. Again, the key level we're looking for, if it breaks above that and trades back into it, you want to go long. Look at it, closed on it, opened on it, give it a quick tap down, but did not trade above it. It did not even trade above it till here, well, till that closed. And you still didn't get an opportunity to get in on it there. So then you look for this here. You go, if it trades above that, oh, it gapped up above it, tapped it, and away she went. That little piece was there was the indication for extending the range. I trade any day I see something still flat, but the itch is strong. Ali, this is a good practice day of self-control. Just the stubborn side of me alone. I think I see so many entries here going, oh, yeah, I could have taken that. Yeah, could have taken that. My stubborn side said, you said stay out of it. So now I've got to stay out of it. Just out of pure stubbornness, I have to stay out of it. Even if the market does some awesome trades today, I'm still going to force myself to stay out. Hans only demo today. I trade any day I see something in demo mode, of course. Good smart man. 10 a.m. news may do something soon after the release. 10 a.m. news. Oh yeah, it's 10 o'clock now. Here it comes. Polls open at 7 a.m. in Houston. Okay. CAN model here. If you look at that as a consolidation. If you want to go higher, you got to take out those two up close candles. 50% of the wick. On the way down, watch that wick. 7 a.m. opens in Greenville, South Carolina. See if 50% of this wick is holding price. The consolidate or this SIBI, its consequent encroachment's holding price, overlapping this wick. You want to see this keep coming lower inside this range. I'm aiming for 277 to 282. mean threshold. The 10 a.m. wick hit 75% of the SPI perfectly. A decent structure break would be down in here. Right now we're coming back into support off of here. At 282 to 277. You got some South Carolina, North Carolina folks nearby. Campione Trading View has a contest going on. I'm doing that today. Up $100 on the account and rank top 7%. Looks like a lot of people don't know what they're doing. Well, Campione, win it, man. Win it for the old Gippa. I'd love to see one of you guys win the leap contest. Put 3,000 bucks in your pocket. That'd be awesome. You get some love there. That's right. We're going to send some love your way. Good luck, man. Stuart says, I'm up $1,800 scalping using the 15-second tape reading you taught me. Well, that's the man. Good man, Stuart. You've been cleaning up using this tape reading method, hey? I remember you were saying, "Oh, I just made 4,500 bucks. I just made 4,200 bucks." I use you to brag to some of my friends. I got guys that are just killing it using this method. Passing demo accounts like nobody's business. Teddy, thank you. Hit the like button. Locked out now. Locked out? How come you're locked out? There's the 282 we're looking for. Literally hit right off of it. Right on a 7 candle. Gotta love it. Yes, I'm much more confident reading and expecting price movements since you've taught me. Well, that's good. And I hope it drops the stress level way down too. Once you get more comfortable with this, you start making your trades. You see it over and over again. Like Michael says, you want to start getting bored with this stuff so you don't have that cortisol rush anymore. And when you get into some trades and you move it into that stress-free moment, let it be stress-free. Don't get super excited about it. Just go, yeah, that worked out the way I wanted it to. And just treat it like a job, man. Come to work, ready to work. Come to work focused. And you can load up on demo dollars, let me tell you. Locked myself out. Don't want to lose what I've made. My biggest problem is make it and lose it. Yep. That's called the power of greed, man. That's the little devil on your shoulder saying, come on, we can do it again. We know this stuff. It's easy. Just like you showed us. Let's do it. Put a bigger load on. We can really bank it this time. If you just load more on, we could really do it. Yeah, it's getting smaller, but that's okay. We'll find it. We'll find the opening. Yeah, it's consolidating. Don't worry about it, man. We'll get in. And then you just make one mistake and you miss that little point and it slams against you and you go, I just gave back hundreds of dollars because I over leveraged because the temptation and the little devil's chuckling away on your shoulder there saying, ah, you sucker. I knew you'd do it. I knew it. Come on, let's do it again. You can make it back. Let's revenge trade. You show that market what you got. You know how to do this. We'll let that one go. You still got $100 left in your account. And then you get to that point, so you've lost almost the whole thing anyway. So just do a Hail Mary play. Put it all on. See how we've got a swing, taking out that high, reverse, take that candle out on the downside. It does come back into it right here. Now you want to see that keep coming lower. Booyah! Now we're inside this range again now. Now you want to see this low get taken. When do we look for a short? It was right there. Just as it was happening, I gave it to you right here. As soon as that low's taken, get the short. That low's taken. Lovely. Continuation. And I think Ollie had already pointed out that this wick has already hit a key level. And look at the little blue dot. Amongst all the candles, the blue dot. So we have a low taken. We have a little reversal. Imbalance. And we're going to give it a little kiss. Give her a little kiss. Take her to the prom, baby. If we run through it, better sign for a short, for continuation. And again, you're buying a discount, hoping to get a bigger discount. Wait for it to come back up into a premium. See how we ran it through the mean threshold. So we're drilling into that candle again. Wait for a body. Here's your run back up into consolidation. That's your cam 1. Cam 2 is in the middle. Cam 3 would be in the middle of that leg right there. So right back into this fair value gap above here. Cleaning out this. You wouldn't want to see more than 50% of that taken out, which is cam 3. Those of you who study cam 3, literally it's right there on that 50%. Body's still above that imbalance. We have drilled into the mean threshold, back into that order block. You want to see that order block get taken or some sizable level of retracement back inside here. Let's look where we're at right now. So we're above 50% of that range already, right there. This would have to go here, like that. Imbalance, stay above it. This SIBI trades above it. We're back inside it. So use that SIBI all the way down to this imbalance down here. So you want to see price stay above that if you want to get back in this range and you're looking for that optimum trade entry reversal. just above these old highs inside this fair value gap here. There might be a little something up here. Stretch that out. There is. So you want to see a body get below here for this can continue down lower. That's the second time we've drilled into this. $271, you said you want to see a body trade below here. Oh, you've had a body trade below here already. I want to see this get taken out here at 272 with a close. One, two, we're drilling into it again. See how it just gets weaker and weaker? Once you've drilled into that order block, it's not even a breaker, it's more a mitigation block. You try to get up here, you mitigate it, you can't get through these old highs. So you drill through it, it's a weaker candle than a breaker. So now we've had a body trade below that level. You want to see it come back up inside here, all the way up to here. That order block's open. I wouldn't want to see the mean threshold get hit yet. Right there. No, the mean threshold did get hit. Okay. So lows, all these little lows here are taken right back into the 50% of this wick. You see that? Held price right at 217. So we've got 17, 18, 19. These next few candles will vie for high or a low. So we're back inside above here again now. Choppy chop. Look back up to 298. $288 to $298. We're inside 288. So went for a discount to premium off the 70% of that range and back down again. And see how we're working that. We're working the discount portion of that whole range right now. We've gone up into the premium, back down into the discount. We've taken out these little highs here, taken out that high. We got to reverse here, trade through it, into it, keep coming lower. Welcome to a messy consolidation. So trade above here on a close. Then you're looking at this candle, trade above that, take out the order block, run up higher into the range. You got this key level in that order block if you want to go higher. First indication to go higher is this one to go lower, this one to go higher. They're overlapping one another. And you still have this larger range where you want to see if price stays above or below this imbalance from here to here. And right now we are staying above it. And they're all starting to overlap now. This one, this one, this one. So now we've got above here. We've got above here. And now you're looking for this one to go up, to get taken out above here. And if it runs below here, welcome to full ring fighting, getting the crap beat out of you in price action. You're getting flipped off the horse, you try and get back on the horse. So right here is where you want to see price trade above it, find support, and keep going higher. There you go. So now it's giving you the indication it wants to go higher. Find support inside this big wick here. You don't want to see it take out that low. So you want to be inside this Zibby here. How's oil doing, Craig? Eek. Look at that. That's a nice little cheese grater. Wow. We're still not even out of that regular trading hour gap yet. Or sorry, that first presentation gap yet. A lot of chop going on here. See, we're still staying above it, all the way back inside it here. You see that? We got above it. We're still staying inside it. Keep going higher. So it's still supporting off of this fair value gap here. Now inversion. Mean threshold is gone. Finding some support off mean threshold. Push higher. Take out that high and look for a return back into the 98 level. There's 98. So that's done. Now you want to see if it gets through this 98 level on a close, and it does. It literally opens right above or right on 98, literally right on 98. So it didn't get above it. It opened right on it. So now you want to see if this comes all the way back to 87. And it is. Now you want to see that push through here, take out 303. There's 303. I'll come back into 98 to 93. Use 303 as support if you can get above it. There's 98. Now you want to see that start pushing higher now. above 303. Find support at 303. Nope. Ran all the way back down to the bottom of the fair value gap at 295. Now run through it. This is the really choppy price. This is when you really get to see the PD array is not holding. It's just kind of bashing around. It's literally cleaning up all of them. It's not just coming to one and then leaving and then coming back to the other one later. It literally goes to that one, back to that one. It just cleans up everything as it starts to go higher. Like it's not giving that nice solid hit off of one array, showing signs of strength and going back. It literally comes back all the way through there and just working that array in. So now we've taken out those highs with a wick, seek and destroy. We're back inside this range now. Now we've got a whole new range above here. There's a fair value gap above you here, and there's an imbalance right here. So if we use this candle as support at 297, I guess you could look at this one here, 295. Back inside the range, coming back to 283, 277, and that's 282, so that's right in there. Inside that range, that's more than 50%, so if that wants to go higher now, it's just come back into this candle, and that SIBI, again, the discount array inside this range, it's hit the edge of that nicely, and now you want to see it react off of here, drive through here, clean out this candle and use it for support to go higher. If not higher, then you're looking for this candle here to provide support right there at 297. Come lower and start taking out the rest of this down here at 277. I'll be right back. Well, look what happened there. We drove through 277, take out the low, Create a new low. Seek and destroy, man. Take that high, take this low, reverse. So you want to see now that we've come back into here, you want to see this start climbing higher now. Here to here. Buy at a discount. You should be already break even and scanning profits now. See what I mean? There's 50% of that small range right there. You entered in on a discount, hit 50, break even, 62, 50. It doesn't close down to you. So once you hit 50%, you're break even. As soon as you hit that 62 right there, if it didn't come down, like if it hit that after it already hit this, then you'd still be in 62, hit 70, you move to 62, and you would have been out by there. Small little run inside of here. If it comes back into that level again, you can start the whole trade over again. Stop loss would be again down below here. If it closes below here, get out of your trade. So watch, this would be your fail safe. Literally came down to give you another opportunity to go long. Stop loss is here, hits 50%, move to break even. 62, now you'd be at 50. Now you'd be at 62. Watch. And you'd be out right there. If it comes back and does it again, then you do the whole trade all over again. So you did it once, did it twice. You're back into that trade either again there, or you can wait till it gets back down into the consequent encroachment there. So you'd be in long there again. If it takes out that candle on the close. So watch right here, 7. Here's where your fail safe. So stop loss is sitting here. There, you'd be out. As soon as it start taking another run on that, you'd be out. Because it just traded below that level, right? Do you see how that consequent encroachment gets hit, drove through? We have the one little wick through here, one little wick through again. Whether that is something new to learn in terms of, hey, it's a precursor to where I want to go next. After I'm finished running out this, I want to come back here with some intention of getting down there lower. So these little precursor wicks, I've noticed those are starting to manifest sometimes before that little dip down and says, hey, look, I'm going lower, comes back up. Doesn't quite give you the opportunity to unload your position here before it runs down and takes your stop. So you would have made money there, and then on the third attempt, it would have came down and took you out. That's buffering any losses you would have taken had that just come down initially and took you right out. So you made money, lost money. So buffered in terms of trying to get back up here, you had a net gain versus the net loss. And with your fail safe, as soon as it trades below there, you go on the wrong side, tap up. As soon as it starts to trade back through that opening again, you're out of it, or it takes your stop. Low taken, reverse. You want to see these two get taken to the upside, or at least trade back into here in a discount. Small range, you want a discount inside here. So I'm going to full run all the way back down to here. Right there. 50%. Pull your fib tool on that whole range again. You'd be pulling in quite tight, right quick, because your 50% would be right here. See there? You got the discount right there. And now we're looking for 50%. You're up to break even. Chunk is off here. Chunk is off there. If it hits 50 again, you're out. There's 70. Comes to 62. So you would have ran out at 70. Moved it up to 62 and you'd be up right there inside that small little range. Picking up dollar bills, my friends. Again, using that fib tool as a method for managing it. Some people say, like, screw that noise, I'm aiming up here. It's going to go up there. Okay, I agree with you once we break this high. But then you can get back in on it, on this high, with further confirmation that feels right. You didn't have any guarantee that it was going to go there until we start getting through this candle here on a close. That candle's high is 2785. This candle's open is 279. So that one's just slightly above that high. Comes back, gives it a kiss. Now we're running higher. Inside this range, pull your fib tool. Start all over again. So you paid yourself here once, and now you're starting here again. Pay yourself back in that range. Taking the fib tool from here to here. You pay yourself, or you start in here, and you're looking to go long. So as soon as you hit 50%, move to break even. Take half your trade off. So your entrance is right here. So watch how this fib thing works again. You got half your trade off here, the other half's at break even, so now you're out. If it comes back into that order block again, down into here, discount again, start your trade over again. Your stop loss will be sitting down below this wick. Hits 50, move to break even, right there. Pay yourself half again. Small, that's 76, that's 5 handles. If it gets to 62, you'd be out if that's where you got in at break even. You're back into this discount array imbalance. So for this reversal, so we got below it, then above it, then below it. Now we're getting above it again. That becomes a key level inside a small range. So if you're running back down into here, you think, okay, where am I from here to here? You're into an option trade entry reversal off of an order block. Fair value gap, traded above it, find support, push higher. So you think about how many times you would have collected on the way up, saved yourself on the way up, saved yourself up to get out right away, come back into a discount array, reversal, trade through it. If you see it body trade through it here, you're on the wrong side of it. Now get out. So ideal entry there. you're out, move to the sidelines and wait. Because right there is an indication it wants to go lower. So you've got open, mean threshold, and this candle up here. You want to see it get through here before you get back in sync with it running higher. Watch here. Tell me those levels aren't important. It literally closes on it here. Not that one, this one. Came back inside it. You want to go higher now. If you're waiting for the body to finally get above it, that one there does. You come back, give it a kiss. Now you want to start heading higher. And don't forget, you're in a premium portion now. You're not in the 50% anymore. 50% sitting right down in here. And now we're getting this potential reversal. Now we've taken that up. So if we get a change in direction here and takes out this candle on the downside, you're looking for a deeper run back into 265 all the way up to 275. One wants to go higher, one wants to go lower. You want to key off these two candles now, all the way down to a fill. Right there. Body trace right on it again. Tell me that's not a level of importance. We gap below it, so now I'm thinking to go lower. Unless we trade a body above 284. Two 279, 284. One of those two has to give way. Who's it going to be? Right there, 279 is going to be the one. Not telling me we're still going lower. So you see how they become key levels? 284 becomes a key level. If we get through it, it just wicked up there. The bodies stay below 279. We want to extend the range. If we come up to 284, all we're doing is consolidating between these two. There's 284 again. So we get a body above 284. And then we get back below 279 again. All we did was just drop below it, come into the rejection block, and now we're back into 284. Traded above 284 now. Find support at 284, starting to go higher. Key levels. Rejection block. Back into the range. Now you want to use 284 for support. Sorry, this imbalance right here, sorry. Didn't see that till I saw that wick. That imbalance right there. Run higher. Now we're back up into the higher range. That's staying on the horse, man. Getting a little shaky, a little loose in the seat, but still staying on it. Where's the carrot? There's no temptation for the carrot today, my friend. We were just watching price. If I put a carrot up there, people are going to think that's the place to put the money. Don't put your money on any of this stuff. We're inside this big range here, or big range, this small range here right now. Like 50 handles. $301. 295. You've hit the 295. Taken, discount. These need to get taken on the downside if you want to start revisiting this and get back into the 264 to 269 area. Look for 301 on the upside. Ooh. And 301 right there. Now we'll see if 301 holds price. If we just get a wick through it, we'll see where the body ends. Look where the body ends, 300 on good. Start digging up in there. More wicks tells me this we got more upside potential here. $301. See how sensitive 301 is? Now I want to see if that gets some support here, or we just get wicks through it. Watch where the body ends up. It's above the 301 now. Good. Find support at this, and we're looking for the next upside objective, which is 306, 308, 311. And I think I'm almost done for today. Gotta drive my wife out to her dad's place. Then I'm gonna go see my parents. But we'll be back with you again tomorrow. This afternoon might prove a little more as we start getting polling numbers coming through. We might start seeing some more sporadic, crazy price action. I'll be watching it throughout the day, so I will be on the Telegram channel. If you're new to our channel, Telegram's up in the links in the description above, and you'll find us there. A lot of the boys like to be doing some chatting. They've got over 120 chats going on. Is that ours? 81 of them are ours. The boys are in a nice little chat. Again, they're blowing it up. So you can just join the Telegram channel, and if anyone is welcome, doesn't matter what your level of price action understanding is, you're welcome to join us there in the Telegram channel for after hours or during hour chats. Guys are putting on their trades, what they like, where they're aiming for, and there's a lot of smart people in there. Just when you come in, please remember to be respectful. No drama. None of us are into drama there. And yeah, you're all welcome. So here's 306. There's 306. And 308, I think, was next, wasn't it? That's 306. 306 is rejection block. 308, consequent encroachment of the wick. And 310, 311 is the high. All right, well, that's going to be it for me. Let's do one more little dash through all of these so we can kind of get an idea where we're headed. I do like this fair value gap. Potential upside fill is 371. We're digging into 318. I'm almost done, yeah. So look for this breaker up here. The bodies are right at 317 there, wherever that high is. What we previously hit today, that's an ideal place for it to hold off and come back down. I do like that idea. So we could start seeing this pull down into what we've driven up in today. Look for a return back to 251. So 250. And see how that acts. Traded below it, come back up inside that, running for the lows. Body trades below it here. You come back up inside it here. It's right now it's nice and clean. The price action is starting to really clean up here for some after news. It's starting to clean up and price is starting to move around a little nicer right now. Again, I'm not going to trust these kind of conditions. So if you are looking for price action, keep it clean, keep it really nimble. Don't forget to pull your fib tools to protect yourself real quick. If you're not big into understanding all the different arrays and how quickly they can, you can find support off them, pull the fib tool on the range you're in and use that to manage your trade on the way down if you're not so inclined to see higher levels. So inside that range, I'll be looking for box right there. That's the bottom of the box. So if you get on the bottom of that on a close, you're looking for a further downside run on these lows here. So 250 something we were looking for, right? 250 something. 248. So back into here. Nice little reverse. That's going quite nicely right now. Yeah, so keep your eyes on that. Keep yourself nimble. We've got lots more trading days left in the year yet. So take care of yourselves, and I will see you tomorrow bright and early. And I'll keep reporting throughout the day on different levels that I'm looking at in on the Telegram channel. Until then, I see you tomorrow, guys. Take care. All the best.